Hey people, what's going on? Salam, welcome back to the channel. So UK, there has been a big car finance scandal type thing happening right now. So we'll see Martin Lewis on Sky News explaining who's due the compensation and how they can actually claim it.
If you bought a car between 2007 and January 2021 on a PCP or HP deal, you may have had a discretionary commission arrangement where brokers and dealers could charge you more interest to get more commission and didn't tell you about it. If so, that's the biggest case where you will be due money back. The problem is you won't know you had one of these discretionary commission arrangements because it was hidden, which is part of the problem. So what you may want to do now, if you haven't already, is put in a complaint asking, did I have a DCA? If you did, you may well be owed money. But don't use a claims firm because they're hardly going to do anything for you and you might get the money paid to you automatically anyway, in which case you're getting 30% for nothing. Do it yourself, and there are free tools on moneysavingexpert.com to help you do that.
Okay, so there you have it. Let's take a look at a Guardian article about this issue. So it says here, millions in line for payouts from 18 billion car loan comp scheme, right? City regulators say motorists should start to get payments in 2026 with most payouts likely to be under 950. So let's take a look here. Millions of drivers could be handed a share of a multi-billion pound compensation package after the city regulator said it would open a redress scheme for consumers affected by the car finance scandal. The FCA will consult on the redress scheme, which could cost banks between 9 billion and 18 billion when it begins paying consumers compensation next year. But motorists missold car finance will warn they are likely to get less than 950 a claim. The watchdog set out the plans after the Supreme Court largely overturned a ruling on car finance that could have led to compensation payouts of up to 44 billion, a similar scale to the payment protection insurance PPI scandal, if you remember, a few years ago. Now, Bobby Dean, a Liberal Democrat MP and member of the influential Treasury committee, said his missold car finance remained biggest consumer finance scandal since PPI. Millions will be owed. Compensation bill is likely to surge above 10 billion. Industry must learn that honesty matters and adjust their practices going forward accordingly, he said. The FCA said it was unlikely that the price tag of its redress scheme, which will include admin costs, would be materially lower than 9 billion, and it could be materially higher. It added that while some scenarios put the total cost as high as 18 billion, it considered estimates in the midpoint of this range more plausible. The regulator will start consulting on the scheme by October and plans to include motorists who were harmed by discretionary commission arrangements, and in a lot of the cases the scheme will be likely to pay out less than £950 in compensation for each claim. These discretionary commissions were banned in 2021, inflated the cost of car financing by allowing car dealers to claim higher commissions if they put customers on loans that earned higher interest rates for the lender. About 14.6 million contracts included that arrangement between 2007 and 2020. The watchdog will also consult on broader motor financing issues where motorists may have been harmed by egregious or unfair commission arrangements. That would encompass a large group of borrowers, unlikely cover agreements between 2007 and 2024, the FCA has stated. So the Supreme Court largely sided with finance companies by overturning an earlier ruling that the commissions were illegal. Judges upheld a single case that was deemed unfair, due in part to the size of the commission paid to the car dealer and how it was disclosed. So before the ruling, the Guardian revealed that the Chancellor, UK Government Chancellor Rachel Reeves, was so concerned about the anticipated impact of the Supreme Court ruling on lenders that she had considered attempting to overrule it. So Nikhil Rathi, the FCA chief exec, said it's clear that some firms have broken the law and our rules. It's fair for their customers to be compensated. We also want to ensure that the market relied on by millions each year can continue to work well and consumers can get a fair deal. Our aim is a compensation scheme that's fair and easy to participate in. So there's no need to use a claims management company or law firm. If you do, it'll cost you a significant chunk of any money you get, as we just heard Martin Lewis mention earlier on in the video. It will take time to establish a scheme, but they want to get it up and running so they can pay money owed by next year. Supreme Court was bought by two specialist lenders. The Supreme Court case was bought by two specialist lenders, Close Brothers on South Africa's first run, in an attempt to challenge the three consumers who collectively won a court of appeal on this case in October. Justices were asked to review the Court of Appeal ruling, which suggested nearly all commission arrangements, unless plainly disclosed and issued under full consent of the consumer, were unlawful. So, if upheld, it would also mean millions of people who bought a car with finance could be owed compensation at estimated cost up to around about £44 billion to lenders including Santander UK, Close Brothers, Barclays, and Lloyds. So that is a huge, massive amount of money that would, hit the economy, hit the finances and wealth of these companies. The sum would almost rival the PPI saga, which cost bank around £50 billion. Now, the FCA said the final compensation scheme would have to balance a range of concerns, levelling the level of harm caused to consumers. So, moreover, it would also have to consider whether lenders may react to a large payout by pulling affordable loans from the market. FCA said it needed to ensure consumers continue to be able to access affordable finance for cars, more vehicles. Car finance industry has claimed a steep compensation bill would break some lenders, while others would be forced to offer fewer or more expensive loans to claw back their losses. Now, the FCA also tried to manage expectations of large individual payouts, saying borrowers were unlikely to get back much more than the amount of commission originally paid to the car dealer, whilst interest would also be applied. That sum was likely to be around about 3% a year. Any scheme that went beyond discretionary commissions would also consider a range of factors, including how financially literate the borrower was when they signed the contract and how much information was provided. Martin Lewis, a consumer champion and the founder of MoneySaveExpert.com, said car lenders may still resist the financial watchdog redress plans. The industry could fight this and it could fight it hard. What we need now is consistency, transparency, speed for the industry and for the individuals who are involved in this. So he hopes that the industry doesn't try to throw more legal wobblers to slow the whole process down. Alex Neil, the co-founder of Consumer Voice, stated this is a vital opportunity to restore trust, put right wrongdoing by dealers and lenders. But as ever, the devil will be in the details. Big test is whether the scheme will deliver a fair level of compensation at scale. There's big hurdles the regulator has to overcome, including being able to engage with their affected drivers, convincing consumers to trust the scheme run by the wrongdoers. FCA said it would ensure lenders assess claims consistently, efficiently, and fairly, adding it monitor firms following the rules and act if they're not. So the city regulator added that anyone concerned about a car finance agreement should contact their lender directly. Motorists who have already filed a complaint with their lender do not have to do anything right now. And it said complaints will be reviewed, not being reviewed until the end of the year in December, and then after they were put on pause by the regulator. So there you have it. So this car scandal finance scheme, there is potential there for compensation, but it won't be coming yet for a while. Okay, people, let us know in the comment section below. Were you affected? Share your experience. Don't forget to like, share, subscribe. Check out the links in the description. Catch you in the next one.